Hi everyone. So today I want to share 3 key business metrics that you should be measuring on a weekly basis, and that should be part of your KPI dashboard. So this is especially for small business owners that are doing well in the sense of revenue. You have crossed at least $1 million in annual revenue, but at that point, if you're not making at least 10% pre-tax profit, then there's really something you need to deeply look at in your internal operations, because at that revenue level, if you're in a service business and you're a small business, you should be able to make 10% pre-tax profit. It's a different story if you're then taking those profits and just investing into growth and you're not taking those home. That's not what I'm referring to. But in your income statement, you should see that your business is profitable. And too many times I see maybe 3%, 5%, and that's not sustainable. That's not enough for you to fund your future growth, to continue growing your business and being able to take some of the distributions home as being a business owner. So today I want to get into 3 key metrics to help you hopefully improve those metrics and at least start measuring those on a weekly basis, so then that way you can make sure that the work that you're doing in your business is actually contributing to growing your bottom line, and not just you're not just staying busy but not necessarily making more money. So let's get into it. So the first metric is your average ticket size for your sales, or your sales ticket size. So what that metric is essentially telling you, each unit of sale that you have, what is that number? So, depending on your business, it might vary, right? So if you're a service business, maybe you do home renovations, that's going to be a really large number. Or let's say, maybe in your healthcare, that might be a couple $100s, or, maybe a few $1,000s, just depends, your line of work. So, but essentially, that's a number that you want to include in your weekly KPI dashboard. So and then monitoring that constantly to making sure that it's not something that's dropping to an unhealthy level. So what that number is going to also help you do is that it's going to help you make sure that you're not just making a lot of sales, that actually those sales are large enough to where they're going to be actually fruitful in adding to your net profit. So that's going to be one important thing. And it's also, if it's too small, then that also tells you might need the volume of sales to a point that might not be realistic or sustainable. So that's really a couple of the main reasons why it's very important to measure that. So let me give you an example. If my target is 100K in sales for a month, and one type of customer pays me maybe $1,000 for each sale, I have that option. I can offer that as a service. And maybe another customer, depending on how you structure your offer or what your service is, maybe let's say it's a $10,000 offer. So now think about, if my ticket size for my sales is 10,000, I only need 10 of those to get to 100K. Versus if it's 1,000, then I need 100 of those. So then that would, that obviously one is going to entail possibly a lot more effort and time and marketing spend. So then that's just something to be mindful of, right? I'm not saying that every business just automatically can charge 10,000 for something, right? That's not the point here. But point is just to be mindful of your sales ticket size, that you're not wasting time chasing customers that are only want to offer you something that's so small to where it's not even covering all of your all your expenses that are going into it, because it should ideally cover all your cost of goods sold. It should contribute to your to covering part of your fixed expenses, and then then that way, once you have enough of those type of sales, then you're able to make a profit. So essentially monitor that each week. Okay, so that's the first metric, right? To make sure that you're not just staying busy selling low value items that are not ultimately helping you generate profit, right? So that's the first one. And then the second one is your number of sales, over a specific period. So let's say if it's a healthcare business, let's say it's a physical therapy clinic, it might be like visits per day, right? So essentially your revenue is going to be your average sales ticket size time the number of sales that you have. So this second number is really just, the number of sales that you have, over a specific period. So depending on your nature of business, that might be something that you're measuring on a daily basis. That might be something that gets measured on a weekly basis or on a monthly basis, but that's another metric that should be in your weekly, KPI dashboard. So this is the second one. So the first metric, we make sure that our sales ticket size is not too low, that it's actually, that's just something that's strong. And then the second metric is now, how many of those items that we need to sell in a specific period to make a certain level of revenue and a profit. So those are the very two important things if you're looking to grow your business, and especially if you want to have strong profit. Because most times we're not just going to make, again, it varies by the business. There might be one where you're able to make such a huge sale that it's covering all your expenses and everything, and you're just leaving you a profit for the month. But most times we have to make multiple sales, right? We have to make, again, it varies by your business, but we have to essentially get to a break-even point. So let's say, my break-even point is, again, keep it simple, 100K. And, if my service offer is 10K, then I need to make, 10 sales at least to cover my overhead and all of my expenses. So then, in order to make profit, I have to go above that, right? So that's the second metric why it's important. We want to make sure that we're generating enough volume of sales that, not that we're covering all of our expenses, covering, our payroll and all of our marketing spend and all of those things, that we're actually having enough sales volume to actually have a profit. So that's that's the second number. And then in most times when we're looking to grow our business, it's going to be, this number is going to be super important, right? It's going to be essentially volume of your sales, right? Again, times that by your average ticket sale size. So if you're looking to grow your revenue, you have those options, making sure that you can grow your sales ticket size or you can grow the volume of sales. But again, monitoring both of those is going to help you make sure that you're not just wasting time on the first one by selling low value items. The second reason it's important is, that monitoring the volume of your sales is going to be to make sure that you're, tracking for each specific time period. Let's say it's a month, to cover all of your expenses and, be able to make payroll for the next time. And that you're up to date on all your any payments that you might have. So that's why it's important. That's something you want to monitor frequently, at least I would say on a weekly basis, because if you're lagging behind, if you see that your volume of sales is low, you're still going to have all those fixed expenses that you have to pay every month. So then that way you can try to do something proactively. Maybe it's a specific something that you need to motivate your sales team on to generate more volume, or maybe you need to do some deep kind of digging to generate a new volume of sales. So that's something you want to make sure that you're monitoring weekly. So the third metric that I want to talk to you about is your labor efficiency ratio, also called LER, and that's probably one of my favorite metrics in helping small businesses make sure that their business is generating profit. Too many times we end up working so hard that most of the money that we're making is just enough for us to bring home a decent salary and just covering all of our expenses. As owner, the goal is really to get a return on investment, and we are getting that through generating profits that we can put into the business to grow it more, and also to take home as the owner. So what this metric is, it's essentially your gross profit. So it's a ratio, first of all. So it's your ratio is determined by having your gross profit as the numerator, and then your denominator is going to be all of your labor expenses. So what that tells you is how much money in gross profit are you generating per each dollar of your labor. So for example, let's say your labor efficiency ratio is 1. So that means every $1 that you're spending on labor, you're generating $1 in gross profit. So, that's essentially what this metric is telling you. And this kind of takes care of overall all the other different metrics that you might also be monitoring. But this is one key metric. If you just focus on improving this, then you're automatically, most likely going to make a profit. So a good benchmark for this metric from a general kind of gold standard, I would say is 2. So that means for every $1 that you're spending on labor, that you're generating $2 in gross profit, right? So if you're not at that point, then this metric tells you what you might need to fix. Maybe your labor expense is too high. Maybe you're overpaying people, or maybe, part of that is that, your second part of it is, your gross profit is not maybe very strong. So that might make you take a look at cost of goods sold too high. This is one metric. If you can just, measure that, and if you get to 2.0 for that metric, I almost certainly can see like your business is going to, make a healthy profit. Because essentially, if you're at 1, that means, the amount of gross profit that you have, it's barely just going to be enough to cover all your expenses. You're not going to be left with the net profit at the end. But if you can be at 2, or again, depending on your business, like 1.75 or 1.9 might be enough. But from what we see, over 90% of small businesses that can get to 2 for this metric, they will make profit. They will make pre-tax profit, a strong, robust profit margin. So this is a metric. I started using this with our clients. I originally learned it, through Greg Crabtree. He's an accountant and is very great at simplifying, the financials of the business and how you can use that information to then grow your business. So that's where I learned it from, and we really have started to use it with every one of our clients, and that's something we're monitoring closely, and it's probably one of the main metrics that we're looking at improving to improve the profitability of the business. So there's a lot of different sub metrics that you can then use to analyze why your labor efficiency ratio is poor. But at least at general baseline, this gives you that something that you need to go and dig into deeper, right? So for example, your labor is inefficient, they're not super productive. So then that might be another part of you're not able to maybe generate a lot of gross profit just because your labor is working efficiently. So that might mean that maybe we need to kind of revisit some of the workflows that they have, or where they're spending their time, or just some of the productivity metrics that we might have for them. Where are some of those tracking? So a lot of strong reasons to why you should be measuring it. Okay, those are So for today, those are the 3 main metrics that I have for you. Again, just to kind of recap, it's your sales ticket size, making sure that it's strong enough, that way it's that you're not just staying busy just to stay busy, that you're actually you're selling something large enough and you're not discounting it too heavily, that you're actually going to make profit off of each sale. And then the second one is your volume of your sales. That's something very important to make sure. Depending on your business, you might have seasonality, right? So in that period, it might be very easy to get those volume of sales, but when you don't, you still might have some of those fixed expenses that you have to cover. So it's very important that you're able to get to your break-even point every month, and ideally exceed that, so that way you can make profit in that. And then the third one, I would say, probably one of the most important metrics for a small business is going to be your labor efficiency ratio. So that means how productive are your employees in helping you generate gross profit. Revenue is not telling you the whole story, right? So it's going to be important that you take a look at your gross profit, because if your cost of goods sold is 60-70%, then no way, it's going to be very hard to get to a net profit. So that's all I have for you today. And I hope this is helpful. Please feel to leave a comment on any other small business topics that you're interested in. I'm a small business owner myself, so nothing makes me happier than, helping other small businesses grow and help them find better ways to run their business and, bringing kind of that, operational excellence to small businesses, because, we love small businesses in America and they're a huge part of our economy. But too many times, like, we want to support small businesses, but sometimes it can be a little bit difficult working with them. Things might be falling through crack, or they might not be everything might not be on point. So this channel is really built to give you all the resources and all the tools of almost so that way you can run your small business at like enterprise level operations. So I hope this is helpful, and I hope congratulations if you crossed over $1 million in annual revenue. And now, just instead of just chasing revenue, make sure that you're actually generating profit off of that $1 million. Because if you think, oh, that'll come at 2 or 3, and you're not monitoring it like a hawk, it's most likely not going to happen. So make sure that you track these 3 metrics, add those into your KPI dashboard. If you have an accountant that you're working with or a fractional CFO, they should be able to help you figure out those metrics. And if not, you can look at my channel. I think I have my website in there, so you can always contact us and we can help you build a KPI dashboard or any other help you would need. Obviously, not a problem at all. So hope you have an amazing week and continue grinding. Small businesses, it's a lovely thing, but it's a challenging thing. So I wish you nothing but success, and I'll see you at the next video. So yeah, feel free to leave comments, and please like and subscribe as I try to grow my channel, and really empower small businesses all across the globe and nationwide in the U.S. to help them run more efficiently and help them generate a lot of profit. So that way it's not just they're not just working hard for just to have essentially buying themselves a job. So all right, take care.